What's up, YouTube? Welcome back to the channel. Thank you so much for jumping into another video. My name is Josh, and I'm just your average Joe day trader. So I had a question come up from one of our members, one of our subscribers, and basically the question was asking if in one of my videos, could I give my opinion on tax implications? This individual said they have no write-offs anymore, sold their rental property several years ago, and his wife and himself are both retired, have an excellent retirement income. But obviously, knowing that each person is different and we have an accountant, would just like your opinion to shed more perspective on the subject. Obviously, it's a great question, and I really do want to be careful here because taxes are very specific to each person's situation. I'm not a CPA or a licensed tax advisor. But basically, since the subscriber mentioned that they're both retired, that they have a strong retirement income, there's no more rental write-offs, right? I have rental property, so I understand that. Um, their situation could look very different than somebody who's still working or investing very heavily in the real estate market. So, in general, my perspective to this is, when you don't have write-offs like rentals, more of your investment income and gains may be taxable at your ordinary rate. So retirement income, pensions, 401k withdrawals, Social Security, etc. All those can affect your tax bracket, which then impacts how much you keep from trading gains. So some traders in retirement look at strategies like holding investments long enough to qualify for long-term capital gains, which is lower rates, instead of the short term. It's always worth checking with an accountant about whether tax advantages or tax advantaged accounts like IRAs, Roth IRAs, etc., could help reduce the tax bite from active day trading or active trading in general. So, in my opinion, the key is not just the trades that you make, but also being aware of how taxes interact with your retirement income. So, since the subscriber already has an accountant, you're in really great hands. My goal is just to remind you that taxes matter as much as the trades themselves. I hope that helps to give a little bit of information to the question. Like I said, definitely reach out to a CPA or a licensed accountant that may be able to answer in more detail and guide and direct you in, your a better direction than just my answer alone. So what happened today in the market? Today is Thursday, September 25th. It's 6:24 p.m. right now. The market's been closed for several hours. We're coming towards the 8 p.m. close for those that don't run 24 hours. It was a red day today. I mean, another red day. The market did about halfway through the morning turn around and start to run back in the upward momentum, but the pullback was real, right? The struggle is real. This is the third straight day that we have seen a pullback in the red with some upward movement within the day, but not enough, to really feel the effects or recover from some things. I have a long-term account. I am in APLD, had and got the pullback, so I am, you say basically bag holding my APLD until it returns, recovers. I know it will because APLD is an incredible stock, and there's some incredible options volume. Basically, people calling for October. I think it was October 17th was the date for APLD to hit $34. Kind of crazy right now with what we're seeing in the market, but basically, here's what I want to share with you. All right. What happened today in the market was that the GDP numbers came out much stronger than expected. And what that means is that the economy is still holding up really well. So normally you would say, like, well, that's really good news, right, Josh? Yes, but the market actually continues to pull back. And why do we think the market continues to pull back? Well, we believe the market's pulling back because a strong economy makes the Fed, which my buddy Jerome Powell, less likely to cut rates again. Now, we just went through this 0.25%, 25 basis point pullback, which is not even enough to what we really want it to be. But now, with having this report, the GDP coming out good, the Fed can basically say, well, look at the report. Look what's happening with the, with the GDP. The numbers are great. Why would we cut the rates again? The economy's doing great. It's really strong. So that is an opportunity for us. We also had the inflation data with the PCE in focus. We, on top of that, we also had several Fed speakers today that basically are saying, hey, we're going to stay data dependent, and we're not rushing into cutting any rates. Jerome Powell even mentioned that stock valuations are already pretty high when he spoke earlier in the week. So put all these things together, and you basically have a Fed that's saying, ain't no need to help. We don't need to be part of helping anything right now. You guys are all very good. Everyone's very good. So the bottom line is this, that the market sold off a bit because traders, investors are realizing that the Fed may not be so quick to cut the rates. Even though the economy looks strong, it's not a crash. It's more like the market taking a breather and adjusting expectations. So the way I want to ask you to look at all this information is, what it means to me, in my opinion, is that we right now are in this short pullback, and it gives us the buy the dip opportunities. Today was a great example of that, and we're going to go to the charts. But many of the stocks that ran down, okay, turned around and ran up even a little bit better than what they ran down from. BBI is a great example of that. We'll talk the numbers, but it ran down hard and turned around and ran back up. If you bought the bottom and you bought the dip, if you understand your support and resistance levels, you saw where it's at, you understand candlesticks, right? And I've been pumping that to you guys. Go watch. I've been pumping it to everybody. Go watch the training videos I put out there about candlestick patterns, and you understand that, you've educated yourself, then you knew when to buy in today and then run it back up. And a lot of people made a lot of money today in the buying the dip, and it's still an opportunity to buy the dip. We're also going to look at, there's stocks right now like Rocket Labs that are low, you know, and we'll get into some of those charts so we can take a look at that. But buy the dip opportunities because they might be setting up right now, right here. Do your homework, do your research, do your own due diligence. But I'm seeing a great opportunity to buy some stocks at a lower price to have them turn around and run back up over the next couple days or even the next couple weeks. I also wanted to share with you, what do I do when the market's running red, right? If this had been the beginning of September, and we knew that September is a horrible month usually, and it was going to run red for many days in the month of September, what would I be doing, right? So when the market's running in the red, myself personally, and many investors, many traders, they're looking often to rotate into defensive sectors. These are areas of the market that tend to hold up better during the pullbacks because they provide essential goods, or there's stable cash flow. So let me give you a little bit of a breakdown to what I mean by some of those companies, some of those sectors. And I'm going to call these the safe sector in red market section. Okay. Utilities. I have told you many times before, if you watched my other videos, energy is awesome when the market is running red because everybody needs utilities. You always need power, you need water, and gas, no matter what the market does. Those are things that people need. So examples of some of those stocks that you could always go take a look at are NextEra Energy, which is NEE, Duke, DUK is the ticker, Duke Energy, and Southern Company, which is SO, is theirs. Also, consumer staples is another sector that you should be taking a look at. Companies that sell everyday essentials like food and beverage and household products, those are home runs because everybody still needs to buy those things. So Procter Gamble, PG is the ticker. Coca-Cola, KO. Pepsi, PEP, PepsiCo. Walmart, WMT, always are good stocks to consider. And then another sector to consider, which usually run very strong in a down market, are healthcare. There's a demand for healthcare, and it's steady regardless of economy. So, for example, Johnson and Johnson, J&J, United Health, UNH, MRK, which is Merck, and Pfizer, PFE. Those are great companies to look at. Now, some of these may be expensive, but if you're looking to park some money somewhere that's safe and potentially during a down red period of time are going to hold safe, earn you some money, and even some dividends, which I'm going to talk about next, these are some great companies to consider. And this is not financial advice. This is my opinion. This is where I go, where I look to park some money when I need to also continue to grow my account even when the market itself is running red. Big dividends or safety plays. Okay, companies with stable dividends can act like a cushion in down markets. So you want to find those companies. I think I put a list out in one of my videos of companies that were awesome in dividends plays, and I'll find that and I'll put that up here. But there are a bunch of companies that give great dividend returns for buying shares of stock that are not as volatile. AT&T, Verizon, Realty Income, REIT. The REIT is another one, are three that are great to look at. And then gold and precious metals, okay, are very good to consider in red market times. NEM, Newmont Mining, gold, which is Barrick Gold. Those are all very good. So when the market's red, smart money looks for safety. Utilities, consumer staples, healthcare stocks, they tend to be the go-to spots because people still pay their bills, they're buying groceries, and they need medicine no matter what. And then if you add in solid dividend players or even gold, right, then you've got a defensive shield when the rest of the market's selling off. So consider those things, take a look at it, do your own homework and research, but these are some recommendations that I have out there for you. Let's go to the charts and kind of take a look at what happened today. All right, so first thing we're going to look at is, as we always do, the S&P 500. And you can see here, let's see, it is Thursday, Wednesday, Tuesday, Monday, Friday. So we had an up day on Friday, ran down in the post, the 24-hour market Sunday night into Monday, launched on Monday. Let me turn off my auto and pull it down a little bit. Oops, that was not fun. Launched up, ran horizontal, and then Monday hit, pull down day, recovery through the overnight. Tuesday hit, pull down day, recovered through the overnight. Pre-market, it dropped today and continued on this downtrend. And it did pop back up. Like I said, it ran back up, then it came back down, then it tried to run back up. But listen, for a market that had an S&P 500 that ran to a low of 655.08 when it was at a high a couple days ago of 667.34, this is not too bad because we're back up to 658.15. So 654 back up to 658, $4 up since the market dropped today and in the aftermarket, going into the 24-hour market soon. Just keep your eye on things because this is, I really believe, going to be a brief pullback, and then we're going to get back into this bull run that we've been seeing through most of the year, most of this month, and into October. Let's look at the average Joe day trader stocks. How did they do today? So Tesla continued to run down today, 449.90 yesterday as a high, but look, 419.08, right? That's basically a $30 swing down. So what do you think you should be looking at right here on Tesla? If it holds, okay, and notice that it pulled back down into my two support and resistance levels here. I'm at a support resistance level. It rejected on my support level at 419.08. 419 is my resistance level. It rejected it, pushed it back up. Well, now it's here above that, about the 424 range. So we want it to continue to go back up. Now, the only concerning thing is you see here that the 20-day moving average has dropped below the 200-day moving average. So we need to get the 20-day moving average back up. But right now, it's using the 20-day moving average as a resistance level. But it's about to meet the 20-day moving average. And if it can continue on this 24-hour run into the pre-market and work its way back up, there's a chance that this 439 resistance level can be broken and Tesla is going to continue to do the run back up. Now, Friday, tomorrow, there's a lot of things going on in the news, a lot of things going on in the market. So you got to be careful, monitor and watch it. Personally, I'm looking at some longer dated calls back towards the $430 range for Tesla, but we'll see. And remember, that's not advice. I am a very green, very young options trader. I'm learning as we go. But in my opinion, that's kind of what I'm looking at, is the $430 range. Palantir today held up well. I actually looked at it at one point. I was like, wow, Palantir is actually rocketing with the market going down, and very excited about it. It hit $184.32, did kind of come back a little bit, sitting at 178.52 right now in the aftermarket. It's a 24-hour stock, so we'll see how it runs. But Palantir is one that I've got for my later down the road retirement life. NVIDIA also kind of mirrored Palantir. Not bad. had a high of 180.26. Put my auto back on, make it a little bit easier to see that. But 180.26, not bad at all. AMD also all day long run. Okay, it dropped through the pre-market and then it just continued sort of on this uptrend through the market day, and now it's running horizontal. Hood, Robinhood, came up, came down, came up a little bit. You know, you'd have to have gotten in and gotten out, and there was a great opportunity to do that. You had a low today of a 120, 180, and a high right here of, let's see, 125.80. So not bad. Good opportunity in Hood before it turned and ran back down. HIMS all day long, and that was really in response to yesterday, kind of hard drop today, and I sort of knew that today was going to be a good market day for HIMS. $50.70 ran up to $54.87 at closing. 54.87 from 50.70 to 54.87. Blah, 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 blah. I got this new tongue this morning. Sitting at 54.60 in the aftermarket. BMNR, not a whole lot going on with BMNR today. Sort of just a watch play. Rocket Labs, though, ran up a little bit and then came down. And I'm telling you right now, this was the buying opportunity, $45.21. It closed at 46.63, sitting at 47.23. Can it run back up to this $49 level right here? I think so, because this is just in the day. If you go back a little bit more and you look at the levels here, we've got, let's see, a high of $54, and over here, a high of 54.16. So, you know, you got to kind of make some decisions on what you want to do here. Do we watch and wait to see if it pulls back tomorrow? Yes. Is Rocket Labs one that I'm considering to get back to 47, 48, $50? Yes. But do your homework, do your diligence on it. IREN had a nice run up today. Could have gotten in at 43.58 and out at this high today of 49.39. Pretty good. That's pretty much about a $5 run. Pretty good. SMCI ran pretty nicely all day today. Intel had some pretty good, powerful news today, so they continue to run up. Very nice. Opened up at the bottom of this at 31.60, 34.65, sitting at 34.45 in the aftermarket right now. SoFi had a nice run up also, and it came and leveled back off a little bit. $28.11. I missed it at 27.06. I'm trying to get it back down in about the $26 range so I can buy back in. APLD, all right, man, super low, $21.40. It's back up right now, $22.55. I am hoping tomorrow the pull back down is short and sweet so we can get this to continue to run up. I wanted to get back to this 23.55 range because I'm a bag holder right now of APLD. And I don't mind being a bag holder of APLD because I have a lot of trust and I respect it, and I know that's going to turn around and do its work. I might just be holding it for a little while. Totally fine. RKT, look at RKT. Not really a whole much going on in RKT today. SBET, same thing, more of a downward run. Cipher, wow. I like Cipher, $11.41. It's back up to $11.95. I like Cipher. And I'm telling you, in the overnight, it hit $18.03. Look at this drop from $18.03. Really, it's more so like we would say $16.45 all the way down to $11. What's it going to do? This might be a nice buy opportunity. WULF in my box. Look at this. It actually broke down out of the box. It had a nice run up today. I wasn't paying attention to it. $11.78. Not bad. Heading back towards the $12 range. Pulled back down. Broke this area of support. And now it's on the bottom using it as an area of resistance. So we'll see what happens. And I'll pull my box strategy over for tomorrow. Open. Nice run today in Open. Look what it did. I had shared with you in my box strategy. It ran all the way up through the night. It rejected this resistance level, pushed back down. Look at all the rejections, pushed back down, hit this support level, right? And this is why I'm sharing with you. This is a great example of my box strategy because I build these lines and you say, yeah, but you built a box. You're calling that your resistance level, your support level. Are they really support resistance levels? Did they hit 3 points? Maybe, maybe not. I'm just sharing with you how I'm doing it. And if you look at the way it flowed today, look, it hit this level, rejected, hit this level, rejected, hit this level, dropped, rejected back up. Buyers pushed it back up, and look, it kept going all the way to $9.21 from, we'll say right here at this $8.23. So you could have made almost $1 per share. Box strategy, try it out. If it doesn't work for you, hey, it doesn't work for you. ONDS, same thing, right? Came down, it held here for a while, went back up, rejected at this, came back down, broke through this support level, turned around, rocketed back up, came back down, held at this support level, came back up. What's it going to do tomorrow? I don't know, but ONDS was doing really nice today. And last, RZLV, same thing. Remember, a lot of these breakthrough drops were because of the S&P 500's drop, but it broke through, dropped, and then it launched back up. We're right now being rejected by this resistance level. We'll see what happens tomorrow. Anyway, that's what's going on in the market right now. Listen, if you're brand new to the channel, thanks for being here. We have the join button, become a member. I put out some videos yesterday. I put out a video yesterday, my first live, walking through me setting up my box strategy, doing some charting just for the members that got into the membership. They are raw because I don't edit anything. It's like me talking this way right now. I'm not editing anything. There's all kinds of goofs and mistakes, and you see me messing up my charts and doing all kinds of things, but I'm showing you my setups. I'm showing you how I, every night, look at the stocks, look to understand my box strategy, look at support resistance levels, and I make some decisions based on what I'm looking at for my next morning, what I'm going to be trading in. So if you want to be part of that with me, hit the join button. I appreciate everyone that is already joined and part of it. And if you didn't know, go watch the video. It's in there for members only. So go check that out. Also, probably not this Sunday, but I'm going to schedule for the following Sunday. I'm going to start doing Sunday Night Live. And that's what I'm going to call it, not to pick or make fun of Saturday Night Live, the show. But Sunday Night Live is where I'm going to basically be live at 8 p.m. Eastern Standard Time, so we can watch the S&P 500 gap up or gap down, talk a little bit about some of the stocks and what we're seeing in some of the movement of the stocks when they open up on Sunday night, because the weekend's a long time to go through before those stocks opened up. So look for that. I'm going to schedule the next one. Would be excited to have you there so you can make comments in the channel. I can answer some questions, kind of work through some things with you there. And then depending on if you love that, that may become a members only channel type of a thing where I'll do some live analysis and things Sunday night with the members that are part of the join membership. Remember, don't stress, don't panic, sell. Red right now is a healthy pullback. We were expecting it for the entire month. We got a few days right now. Let's see how long it lasts. Buy those dips. And if you buy something, my recommendation, not financial advice, but if you buy something, then take a look at it. And if it goes down more, you buy a little bit more. Don't go in and buy 1,000 shares of something right off the cuff right now. Buy 100, buy a couple hundred, whatever you can afford. If it drops down, buy another 100, average dollar cost down. But that's what you want to do. And hey, before we hang up, BBAI, because I know you've been waiting for this one. BBAI, look at that. All right. So $6.77. I know that some of the guys in the Discord bought it at about $7.13 or 14 cents right here. I still think it's a great opportunity because remember, we had just broken $8 at $8.48 was the high. And, yesterday it did pull down. Today it did pull down. But if we can get through Friday and make it to Monday, I think that this is going to continue to turn and run back up. They've got some good news, a lot of things going on. And let's see what happens. That's it. God bless you. Thank you for being here. Josh out. Peace.